Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So the day started off very interesting. I think most would have loved a big down open to create some kind of buyable, just buyable in the hole trade to go positive and push up, because it seems like we've been getting that kind of trade, being able to buy weakness, but then you have to sell resistance or sell resistance to and figure out where there is, some room. And then, on the flip side, there's been spots when as soon as you hit it and it starts to roll over, people are getting short and making money that way. But if seems like if you start shorting a little too early, you better, have a thesis and be good at it. And if you, don't take your trade long or you buy it back and you don't do it at the right price, it could turn a winning trade into a losing trade. And at least I guess there's two-way volatility, but it's not easy volatility. If you look, let's just go into the chart of the spiders. You'll see, this was the chart we posted on September 22nd, right when we broke out, came back below the 21-day, which was a sign for caution. Then, multiple days later, after breaking the 50-day, remember we danced around the 50-day a little bit? Danced around the 50-day, danced around the trend line that was all the way in from February, and then finally broke below. You had your test of the 150-day, bounce back. What did it do? It failed at the 50-day, then rolled back over, broke the 150-day, and now we're hovering below the 200-day. So the question is, what now? Okay, at this point, you got to see how long do we stay under the 200-day. Do we stay under the 200-day and roll over? Do we push through a little bit, come back below? Look how many times we played with this 50-day to make it seem as if, actually it was right around here, I'm sorry, make it seem as if maybe we pop back above the trend line and fell. So within that, it wound up getting rejected. So here, it definitely not a lot of buy conviction, after 3 down days. But you go to the 5-minute chart, and let me just show you, or talk about real quickly. My thought this morning was, felt as if there was a rally in us, that you could buy the first move lower in the spiders or in maybe the Russell that was showing relative strength yesterday, maybe the oil stocks, and I was watching them close because typically when the oil stocks started to bounce, a little power came back to the S&P. So I hate to say it to people out there, we're not just watching the moving averages. We connect dots by watching the oil, watching the Russell, looking at the leaders, looking at yesterday's low, looking at the news flow, how we react. That's what traders do. Okay, it's not, we're not just sitting around eating bananas and watching the moving average monkeys. But anyway, so, one of the charts I also put down was just, resistance 1, resistance 2, resistance 3. So at least you had a roadmap on where was the easy bounce, and where was a bounce that, wow, okay, let's get to resistance 2. We couldn't do it the day before. Maybe that's a spot, and then you have to be careful. And having the 5-minute chart after the move or during the move is, helped me get stopped out of my trailer so I don't turn a good trade, into, something that, takes money away or too much away. So anyway, so my first thought was to buy the first pull-in. If you were in the VTF, you saw me do it with the spiders. And you go here, okay. This was your gap up, okay. First quick move. I actually think some of us made some quick money. I think if I remember correctly, I made some quick money on that. Came in, and then you had a nice little wedge formation, okay. On this wedge formation, you held the prior low. Guys tried to force it negative and through the prior day, and it didn't happen, so you had to squeeze. And first resistance, okay, in the chart was right here. First time we got here, okay, if you had that roadmap, you took a quick trade. Second time, actually pushed through, held, and went to almost resistance 2. I talked about that zone, and if you look here, the 200-day starting to come down a little bit there. But so the zone was like 190 to 190.50, and that's kind of where we failed, or that's where we at least paused. You didn't know if we were going to fail. So if you did this and you drew this small ascending channel there, okay, after the trade, 2 things you could have done. One, first of all, hopefully, if you were in this trade, you bought it here and you added, you held into this, pullback, or maybe you added to wait here. I think we were in it and I sold the majority into that and tweeted it. Okay, then had a little trailer. So what I do is I'm like, what do I have to do through lunch? What will change this trade for me? Okay, how much do we give back? And I was like, you know what, if we, don't hold right here, okay, to me, we could fail. So I went to the gym and I was on my little stair machine and I looked at the thing and I'm like, oh, got stopped out here. Then had a meeting, had a few things. By the time I came back, we were all the way down here. And we're already, looking as if there was a small little 5-minute head and shoulders pattern that broke the neckline a little bit here before having that move to the downside. So, you're talking about a round trip. And then everyone's like, oh, look, we did the H pattern again. So everyone's like, what's this H pattern? Well, first of all, you look at this has been the same thing every day. Yesterday you had the same type of situation where, here was a bigger resistance, and this was your other resistance because it was the prior low, and you had a quick move up, consolidated, gave you the move, and then this was my out. So, I made money during this, gave back a little but got stopped out, made money during this, gave back a little but got stopped out, and that's what the market's doing right now. We're in a tactical tape where rallies aren't being supported or having commitment to it, and you could either do that, or some people, which you're probably making more money, but it's getting a little dangerous down here, shorting this trend, which has been better to short. Rally back up, short, rally back up, short. And look, this is the H sell setup. Here's your pole, and this looks like an H, right? A lowercase h. That's what technicians do. We're all a bunch of bozos, right? We look at letters and we name them, okay? We don't try and act so smart, but that's what it's been going on. So here's your next H sell setup. Here's your pole. There's your rally up. This time it didn't get held by resistance 1. It went almost into resistance 2. Last time it went to resistance 1 versus resistance 2, and resistance 3 was higher. And then we closed weak. So don't know exactly what the scenario is here. Okay, let's go to the SPX because I didn't mark that fully up. But it closed below the 200-day again. So you go to this trend line, okay, and let's go back. There are a few of them, right? There are a few trends to kind of know. One of them being from this one, right? Okay, first of all, this was one that broke. Let's go back into, this one is broken. Okay, let's go back a little further. Which is the one that I was looking at from July? Okay, that's over here. Okay, let's get this out of the way. The July trend, I remember this red dog reversal. I've done it in some presentations. Started here, you draw it, gets you all the way into about 1800. And that would kind of line up to this, and that would give you a move about 10% off the highs. Do we get there? Maybe, but that's something on a macro basis you watch. Here's another trend, right? This one from this low, that November low. Okay, that's kind of broken too. And the longer you stay on the right side of these trends, the more conviction some of the bears will have. So with that said, we're kind of in no man's land where you can have risk down. If you've made some good money shorting, congratulations. And if you're, trying to figure out what's next and you're trading for a living, take those trades like I just showed you using the 5-minute charts, and sometimes you get a little alpha if you, if you go with the relative strength. If you look at the IWMs, doesn't look like much, right? It's still below this, remember this whole neckline? Here is the neckline that broke below, giving you that measured move that we talked about right around here. Okay, it's one measured move. Another measured move actually takes you down to here. So that would probably line up with S&P 1800, but we'll see. Here was, the right side of this is, you've had a few right side of ascending channels that you could have navigated. Okay, everyone was saying, I don't know, the people were bashing the Russell all year. Okay, I don't know about you though. If I was short and added to a breakdown of the Russell when everyone was saying it's going to break down, I don't know if I would have stayed solvent into that move or blown up my trading account, or at least have a lot less hair in my head. So I like to follow descending channels, which triggered to the upside, ascending channels to the downside, descending to the upside, lower high here, and this was your last out. And said, okay, now let's see if the IWM will help lead the market lower, will create enough of a headwind, will get below the 200-day and stay below it, will break the neckline. And that's what happened here. So you didn't have to have this whole entire crazy thesis about the Russell, until this ascending channel broke, and that was somewhere in early September. So you go to here, where we are. Doesn't look like much, but there was a nice 5-minute quick trade there. Okay, this one showed relative strength, right? This one, you saw that I showed you the spiders went all the way back down to test the low there. This held sideways, and Sperling had a really good trade, and then gave you a nice little trade above this area for a point. And then what did it do? It hit this area, and and that was that. You could have done the same thing here, ascending channels. Here's your ascending channel in the 5-minute if you're trying to ride the daily trend. This was your daily trend. broke below it, came back on the 5-minute chart. People like, could you use a red dog reversal on a 5-minute chart? Okay, there's your red dog reversal. Traded through, came below, never came back above that, and then, broke here. And so that trade changed. So this was your, gap that didn't get filled. Let me just show you the spiders. Remember the spiders? That gap got filled, didn't it? Look, got filled, came all the way down. You go back to the Russell. Did the Russell get filled? No, held higher, relative strength. Then you had a decent trade. Here was, signal number one that it might be over. It came back way too far. And then you had a lower high, and that could have been your out right there or here. So at this point, there's not much to do here. I guess you could draw another descending channel here if we were, to rally. But, I just don't think it's that compelling. This 108 would be your next line in the sand, or maybe back to 109. But there was a little doji there. And then you had the oil sector. They've been decimated. The refiners decimated. Schlumberger, Halliburton, EOG, you name them, they're all decimated. XLE, oil going lower is probably at some point a good thing, but it's still in the 80s, like mid to low 80s, and that's not really cheap. I remember when I was on CNBC talking about the buying opportunity in oil, I think it was 35. We're still 2 times above that and then some. So anyway, the names are getting crushed. And I think some of us made some decent money, when the XLE and the OIH tried to bounce. But if you didn't draw your 5-minute trend, which has been very handy lately, sometimes they mean nothing, sometimes it's very handy, you could have given back your profit in it, or maybe even just cost average the whole way down and give it all back and then, capitulate it out. You look at the XLE, and still, just to learn something here, guys. First of all, here's a trend. I like to just show trends to show you when you can make adjustments. Nobody knew the oil group was going to be the worst group. It actually started out the year very strong and then went sideways, broke below the 8 and 21 day, which is one of my theses, to get out of the way and see what's next. Hit the 50-day, came back up lower high, right? And then came in and broke the 200-day. So right here, if you were to be figuring out, is there real selling in the the oil patch or these stocks, okay, you could have judged it right here versus 200-day. It spent 5 sessions below it. It didn't pop right back up and go. 5 sessions below it, and then triggered below. So if you were trying it here again, saying, this is a fake out, it's a bear trap, they're going to come below, and then we're going to pop back a little above, and then the oil group's going to be great. No. Below it, traded below it, and now look where it is. You could always save yourself some pain. So now what do we know tomorrow? Same friggin' drill, okay? This is the low, and we'll see how it handles it. You go to today, the 5-minute chart. How could you have handled the move today? It wasn't a blockbuster move, but here it is. This was your, V-type bottom, okay, where it went below the prior low. You could have drawn a 5-minute descending channel, right? Here was your first, 5-minute engulfing bar. What did this do? This engulfed this range in 1 bar. And then if you missed that, because a lot of people missed it, I missed that, you then had a flag of commitment above this, and this could have been your long right there. And I think that also coordinated to almost the prior day low. So from here, you don't have to find the bottom, but engulfing 5-minute bar, little bit of commitment, sideways, here's your long entry. And then from there, it went about $1.20. And I remember selling some there, and then I also went to the gym, and I put my stop in. I said, what would cause this trend to change? Okay, I could have put it really tight. Actually, I think it was really tight. I put it in somewhere around 81.40. Okay, I was like, this, if we give back 25% of this, I'm done. Because I did the same thing the day before, okay, where, I caught a bounce. Okay, there was a bounce here. Okay, you did your first move, held higher. I think I bought it here, made the move, and then I went to the gym again. I keep getting stopped out in the gym. 1 o'clock. Put the, source said maybe it can continue, or not, and then put the stop in, and then blah, blah, blah. And again, a lot of H-cell setups here, okay? But again, one of these times, though, it's going to break this because it's getting that crushed. But until that happens, keep the 5-minute charts up. This downtrend is in control, and as long as it's in control, shorts are in control. I don't even know shorts. I just think sellers. It's crazy where the hell these sellers are all coming from. Let's go to the daily chart. I just want to see, what happened, where the volume is on this. Go to basic studies, go to volume. Okay. All right, lots of volume the last 3 days. Every time it's tried to reverse, it's failed, and at some point it could try again. OAHs were actually stronger, and then also, reversed. And then look how when this broke 200-day, did it reclaim it? No. Continuation, right down the slow. We'll see how it handles it tomorrow. We talked about, something giving us clues, and that was the DAX, okay, which we've trailed the EWG. Again, remember this first move lower, okay, you couldn't maybe see that one coming, and then this is when the 8 and 21-day had a decisive move below, okay, oops, sorry. All right, let me remove the volume just so you can see it a little bit more clean. Remove volume, okay. I show this every day in the morning call because I just want to remind you that, remember we thought, Germany couldn't do any wrong and that it's the strongest European economy. They own everything. Well, anyway, this is the false breakout, and so it was an island top. Came in, tested the trend line, lower high. This could have been your out. And then what did it do? It traded below the 200-day. It looked like a trap. This did look like a trap. I remember when it happened. I'm like, oh, let's see how it handles the 200-day. And let's just take a close look here. Went below it, opened below it, closed back above, came up, was below the 21-day, broke below it, then accelerated, went sideways, just drifted up, and then went back, to the lows again. And now I think the DAX is, I don't even know, I think 9% down for the year, and maybe even 13% or 14% off the highs. And so it makes you think, okay, the S&P here is, 7%-ish off highs. If that's 14% off highs, why not here, or why start too early, or why at least give some things some space for more clarity. As far as other, just stocks, I really haven't been trading many stocks lately because in corrective times, you want liquidity and you want things that move. And when you have the spiders moving 3-4 points in a day, or the XLF, not even XLF, I'm sorry, the IWM going 2 points in a day, or the XLF, like there's enough volatility in these major liquid ETFs, not the small triple ones or quadruple ones, the big ones, that you don't have to do that because, to me, Facebook has been noisy, no real trade there. Haven't done much with this ever since it broke this area. I'm like, you know what, it's not a go-to stock. I'm not going to buy it up, and I don't feel like shorting it, and it's come in. That this probably needs time at some point, maybe. We'll see what happens here. As of now, it could be a bear flag. Twitter, also, I didn't trade it once today. This changed. This was my go-to stock when it was above the 21-day push. Remember, looking good until that Friday, traded below this, engulfed this. I think I was long, it got me out, broke the 21-day, and now, it's not really anything that I'm so compelled to go after. Apple closing the lows today. It's going to be interesting to see what happens here. It's closed below the 50-day, which has been a guide for a while. Not so sure. I know it looked like it was a little in jeopardy here until Carl Icahn came out and said it's worth $200, and I remember buying it here, and it failed again. I don't know if it's going to break this, but if you're a trader, I would be just a little careful, because if it does, it could see this moving average. Right now, it's still showing a lot of relative strength. It's just there's no momentum anywhere. Today, some other stocks had like oversold bounces, and that's what they were. Okay, an oversold bounce back to the 200-day, came back, closed doji. Be careful when you're just buying a pull-in. This gave you a clean move on the 5-minute. This was actually really nice here. Okay, this was your W, right? You had your quick move up, double bottom. Then you had, when it cleared this W and then held above it, nice commitment flag, went actually another 6-7 points, failed here, and then once it broke this upper area, it just trickled and trickled and trickled low, and you could have given back a lot. This was quick and calculated. Then he even had commitment, gave you another move. For me, if I was trading this, I would have been done right here. I wouldn't have stuck around even for this. But that's what you're looking for now. You're looking for igniting moves if you're trading long, commitment to that igniting move, so you have a level to trade against, because the igniting move happens out of nowhere. You don't need to be catching a falling knife for it. You just want to see the first bar, second bar, hold, and then you go with it if it's going to be the case. And then map out resistance so you could sell into it, and then maybe even flip short if you're good at that. And some guys are talking about on the the VTF, they like the miners right now. Let's see, the GDX. Look okay. This was that major wide range bar, right? And then probably came in a little bit more than people would have thought, but if you bought this on that red dog reversal outside day and said I'm going to give it to the lows, you're still there. And if you're thinking you're getting a secondary move, which you haven't had yet, there it is. So we'll see what happens. Keep that on the radar. Let's see what gold is doing. Gold still, hanging in there. Traded above this little descending channel here after filling the gap, held in there. Now it's above the 8 and 21 day, so see if this could remain in this trend and grind a little bit back towards the moving averages. This still has come a long way from from earlier this year. If you sold it here when it broke this symmetrical triangle to the downside, or even this one, maybe you did buy it here above 117 and see if there's a move back to the prior low, which could turn into resistance a little closer to 120. We shall see. And what did JP Morgan do? JP Morgan came out with earnings and reversed, okay, which is good to see into the 200-day, but it's kind of loose and wide and it's going to need time. Stock broke down from this area and just looks like a choppy mess. Not much to do here with JP Morgan. Tomorrow we'll hear from Bank of America. This too, I think a little bit better. I haven't really been so active in the banks. I was here on this move and I think I traded at this one, and then once it broke here and got back below 17, I think I used a 21-day as my stop, and now I'm just going to wait because I don't know exactly what the market's going to be doing, and no need to rush to do much there, and this isn't moving around enough, and it's got earnings tomorrow, so no need to have earnings risk. Intel was out after the close. Face value looked really good, and look where it came from, okay, that big gap up, and had a lot of weakness on that microchip news, but maybe the report negated some of that. I don't know. I'm not watching it right now, but if it were to get above this, okay, I think it did it after hours, you have a gap to be filled, and maybe this will help tech, maybe this will help the market tomorrow, we shall see. We'll see. Right now the environment's very tough. USOs, wow. Another bear flag continuation lower, and look where oil is. Oil has been below the 200-day for a while. So if you were, wanted to be bearish on something and short something, when it broke below the 200-day, stayed below the 200-day, that was your out. Okay. Besides my technique when it closes and trades below the 8 and 21-day. Okay, that's the momentum level to get out. Then you actually even had like a head and shoulders top here, where whatever. So PS, it's been below it. It's accelerating. I guess go to the weekly chart of the USO. And, let's see. Where's the next major support? This has been broken. And now you have 30.79, which it's right near. And then you have this low, which comes all the way into about 29. And then I guess I don't have the entitlements for crude itself, but that's the USO, which is the ETF for it. And in conclusion, volatility is high. There's been two-way trades both ways. We've had a pretty orderly corrective process where first we had the breakout failure, right? Signal to take a little caution. Then we broke the 8 and 21-day. You go from portfolio approach to tactical approach. Then we broke the 50-day, okay, and had a quick move to the 150-day, came back up, retested the 50-day, didn't reclaim it. So if you missed your exit, that could have been your exit. Then we broke the 150. With the 150-day at 1925 after trying to hold it for a little bit, another methodical move lower. Now we're below the 200-day, and now we'll figure out, do we stay below the 200-day or play with it for 4 or 5 sessions and then continue lower down to the macro support around 1810, or do we reclaim it and, kind of stop a little bit more than the average correction that we've seen in the past 2 years, or do we, get back to that 10% area as, QE's winding down and there's still all these, headlines around the world with Ebola and with Hong Kong and with the European slowdown, recession / whatever is going on over there. So there's a lot to think about, but ultimately the most thing you can do is just think about your keyboard, your process, control what you can. Cash is a position, preservation of capital when things are crazy is always good if you can't handle the volatility. And there's been some levels to watch, some things to do, and just keep doing them and try to make some progress. Have a great night, guys.